right here, we had a moment where there was a good chance everybody's looking for new highs. There's a high right there. There's a high right there. So when we play this, they approach it, and everybody expects those highs to get taken out. Well, they do, but a funny thing happens. Bam, a 200 lot buy order comes in. See that? It not only gets rejected, it gets rejected quick. So right here where my cursor is, you have to think downside to the right side. You have to stop thinking upside when it turns off this 200 lot big buy order and rejects it that quick. No coincidence that it continued lower. We also have the visual of all this green opening up right there with the white shows downside also because too many longs. All right. Now there was another really interesting moment that only very few people could see. We're one of them. When we rally up in here and this iceberg comes in, take a look at this iceberg. This iceberg is chasing the market up. It's a resting order with more size than meets the eye. He's started down here, then he comes into here. Now he's actively trying to buy 81 even. Watch what happens. He turns it into a buy market order because as soon as generally a big iceberg on the buy side gets filled, chases it up, gets filled, we go down. Well, this was unique because he doesn't get filled with the order itself, but a big market order comes out for about a total of 400, and then he goes away. It's not a coincidence. So watch it. He's still there. He's actively trying to buy 81 even. We don't know how many he has left. Boom, right there. He buys probably another 500 in here. That's what the blue, right, squares are, buy market orders. At the same time, this iceberg gets canceled. How do we know it's canceled? We throw an asterisk next to it. It's no longer working. It's not a coincidence that this market order comes in at the same time they cancel a big bid. What happens to the market? Near term, bearish, goes down. So these are predictable moments if you're watching order flow the right way. These are less random tops than you'd otherwise get. People, think about if you're not seeing this, what you're missing. A lot. So it's not just seeing the orders. It's obviously trying to track the intent of the order and then what the hell to do with it. So many people try to fade a market only because it rallied too much or it broke too much. Or they missed selling it, so now they try to buy it. They missed buying it, so now they try to sell it. Psychological craziness. But tops and bottoms are not random. They have to get people stuck at the top long and stuck at the bottom short. You don't know why, then stop trading and learn why first. Meaning you're taking on way too much risk if you're trading a live account and you don't know the real reason why tops and bottoms form. And the whole idea of other people's position and too many people getting too long and too short.